According to a June 2015 World Bank report, Rwanda ranks behind similar countries in most key economic areas, despite reportedly remarkable growth over the past decade. The report states that the Rwandan economy is characterized by high economic growth with low per capita income, low exports, low private investment with high public investment, and strong dependence on foreign aid. This video will examine trends in these characteristics from the 1960s to the present day. Data will be presented in a way that will allow comparison of economic performance under various political regimes. Rwanda's economic growth trend from 1960 to the present time shows that the country's economy has had its good and bad moments. Between 1960 and 1973, as the first political regime was overthrown, Rwanda's economic growth averaged 3%. Between 1974 and 1993, a year before the second regime toppled and Rwanda's economy collapsed, average growth was 3.4%. Between 1996 and 2014, Rwanda's economic growth averaged 8%. From 1983 to 1993, Rwanda's economic growth was on a level with many low-income countries. However, after 1995, it grew to a level that would far exceed them. Despite this, the linear trend of Rwandan GDP since 1960 has remained static. This implies the Rwandan economy has not significantly grown since gaining independence. From 1965 to 1973, growth was driven by three factors: the agricultural sector, a minor industry sector, and a modest service sector. After 1974, the agricultural sector reduced by 24%, though remained the largest growth factor as the industry and service sectors slowly increased their GDP share. Continuing this trend, between 1995 and 2015, agriculture decreased further, along with industry, making the service sector the largest growth contributor. Rwandan GDP per capita shifted from $71 in 1973 to $351 in 1990 and $697 in 2014. However, even the least developed countries showing similar GDP per capita to Rwanda in 1985 had far surpassed it between 1994 and today. As Rwandan GDP increased, similar progress was found in its human development, jumping from 0.299 in 1980 to 0.483 in 2014, still remaining below that of sub-Saharan Africa, even contemporary low human development countries. When adjusted for inequalities in education, health, and income, human development reduced to 0.243 in 2010 and 0.287 in 2012. In 2014, this fell to 0.33, a level close to its 1985 figure. On average, Rwanda loses about 30% of its human development to inequalities. While average shares of sub-Saharan Africa's export contribution to GDP increased between 1960 and 2015, Rwandan levels remained low at only 10% over the same period. Rwandan imports also kept on rising. Between 1960 and 1973, the lowest and highest rate one could have exchanged $1 with the Rwanda franc was 50 and 100 francs. From 1974 to 1994, these were 76 and 144 francs respectively. The Rwanda currency depreciated most between 1995 to 2015. The low was 262 francs and the high 720 francs for $1. Since the 60s, Rwandan total investment to economy has increased from 9% in 1973 to 16% in 1993 and 25% in 2014. While sub-Saharan Africa's total investments had previously been higher than that of Rwanda since the early 80s, from 2006 onwards, this changed with Rwanda surpassing sub-Saharan African levels. Rwandan investment composition is worth scrutinizing. At 8% of GDP, private investments constituted a larger contributor to Rwandan growth than public or foreign direct investment in 1989. By 2014, private investments remained unchanged, but public investment, sponsored by foreign aid, became the chief contributor at 13% of GDP, with foreign direct investment increasing to 4% of GDP. On average, between 1960 and 1973, aid to Rwanda constituted 9% of gross nation input, above that of sub-Saharan Africa. This increased by 5% on average until 1993, while sub-Saharan Africa's increased only 1%. Aid to Rwanda reached up to 21% between 1995 and 2014, while average aid to sub-Saharan Africa remained unchanged at 4% of GNI. Forecasts predict future aid to Rwanda will rapidly decline to below 5% of GDP, though its revenue may slowly rise to 21% by 2034. Unfortunately, this is still far below current East Africa Community target for revenue collection of 25% of GDP. This explains today's increasing debt. Rwandan external debt increased from $8 million in 1973 to $900 million by 1994. It received crucial debt relief in 2006. However, less than 10 years later, total external and domestic debt would reach $2.8 billion, equivalent to 35% of GDP. Considering forecast aid decline, further debt increase is inevitable in the future. As Rwanda's economy shifts from aid to debt dependency, public funds lost through irregular expenditures remain a concern, veering from $34 million in 2008 to $20 million by 2011. Despite a decrease in 2012-2013, levels rose again to $16 million in 2014 and $26 million in 2015. Expenditures of this kind include partially or non-justified and wasteful expenditures and unauthorized staff advances. Loss of capital through illicit financial transaction also rapidly increased from $145 million to $1.039 billion between 2008 and 2013. These losses mostly come from trade misinvoicing outflows. As an audience, we also must ask, why does Rwanda persistently rank behind similar countries in key economic areas since the 60s, and what impacts this has had and continue to have on the country's social development?